For this week, we're going to be focusing on 3 interest rate meetings from major central banks. However, I'm also conscious that we have the US election on Tuesday. However, we are not going to be looking at a particular outcome for a particular tradable opportunity, because particularly in 2016, almost every single analyst was completely wrong on what would happen with the outcome of a Trump election. So we won't be making that mistake again, and we're going to prefer to wait, see what the election result is, see how financial instruments work, and then we'll prefer to trade the aftermath of the US election if there's any obvious tradable opportunities there. So do look out for the cheat sheet. Of course, we'll be updating it with any significant things on the cheat sheet. And of course, we've got the usual array of central banks ahead. So we've got RBA, Bank of England, and Federal Reserve. And of course, we'll be covering Federal Reserve and the Bank of England meeting live next week as well. So do hope you can join us for that. I hope you have a very good week, and look out for the cheat sheet for all the details ahead. So what we have coming up for the week ahead is, obviously, aside from the US election, we won't be covering that because we'll be waiting for after the event to look for any clear opportunities. Elections can be very tricky to trade, and with the amount of volatility, we would prefer to wait for the reaction after the election, and that should give us a clear direction once we've seen how markets have settled. And often what's anticipated into the election is actually not what materializes, so they can be very tricky. And particularly with this election and Donald Trump and Kamala Harris, it's very uncertain as to what the result and the outcome would be. So looking for the other events that we have this week, and we do have some significant ones, is the RBA rate meeting. Now, the RBA has moved away from explicitly considering rate hikes. However, the minutes on October the 10th reaffirmed that the RBA is not ruling anything in or out. So Governor Bullock said in the press conference they hadn't spoken about a rate hike at the last meeting. The last inflationary data wasn't anything to be particularly concerned about, but the inflationary pressure is still there. So what we're looking for at the RBA meeting is any indication that they're still interested in interest rate hikes. If they are, then we'll be looking for Aussie New Zealand dollar upside bias. So we'll keep those details in the cheat sheet as we come to the interest rate meeting on Tuesday, but that's definitely one for us to be looking at. Thursday, we have the Federal Reserve meeting. Now, the jobs data at the time of making this video, which is before the non-farm payroll print, has been pretty robust. And the Fed aren't under any pressure at the moment to cut by 50 basis points. 25 basis points is expected, and that should allow a little bit of respite for the dollar. And we'll have to be factoring in the presidential election and the potential for dollar strength if we do see President Trump have a second term in the White House. That's expected to be dollar positive, but we'll have to see how that pans out. Also, one of the key things to be aware of with the Federal Reserve meeting is we're going to be looking at the forward guidance, because they've communicated just 2 interest rate cuts this year, and markets will start looking further out. So we have seen the dollar recover over the last sort of 6 weeks, and we're nearly at a sort of a more neutral place. So forward guidance will become very important on Thursday. We'll be looking at that, and we'll be covering that live at the time. Then we have the Bank of England meeting, made more complicated by the UK budget. The UK budget is expected to put some heavier costs on UK businesses, and that higher taxation on UK businesses is expected to flow through into higher prices. And of course, higher prices is going to lead to inflationary pressures, which is the very thing the Bank of England is trying to stop. Short-term interest rate markets before the budget were pricing in an interest rate cut, about 79-80% chance. We'll see how the Bank of England meeting goes. If they do still signal aggressive rate cuts, that'll be a big signal to markets for pound selling. If they're a little bit more cautious, we could see some further pound upside even after Thursday's meeting. So this will be a key one for us to watch, and a key one for the pound. And obviously we'll be looking at the pound in relation to what happens to the Federal Reserve later and the US election. So they're the 3 main things that we'll be focusing on for next week. They're the top 3 events. Do check out the cheat sheet, and I'll give you a full rundown as what to expect for each meeting.